So in the group, I was asked to create a video on the trendline breakout strategy and what separates a good entry from a bad entry and how you can kind of spot that and how you can trade it. So some of the pairs that I like to trade are Great British Pound CAD, Euro CAD, USD CHF, and Euro NZD, Euro Australian AUD, and also Great British Pound NZD and AUD as well. They respect the system really, really well, and I've kind of found that over time and just through back testing, they're the best pairs to trade the strategy on. The price action on them is usually really, really good. So Great British Pound CAD is probably one of my favourite pairs to trade on at the moment, and I've got a really, really good example of of this. So most traders are chasing breakouts and wondering like why they get wicked out, and in this video I'm showing you how to separate like clean high probability entries from noise just using structure shifts and trendline breakouts, liquidity and market confluence, with a little bit of fundamentals in there as well. So as I say, Great British Pound CAD's a really, really good example of this, and we can kind of do a little bit of back testing, and I can show you exactly what I'm looking at. So we know that the market obviously generally tends to trend upwards, and we have market structure as we explained in the previous kind of how-to video, where we move up, we move down, and we kind of come back and we retest certain levels, and then we move the other way, stuff. So the market works like this on all time frames, and it works especially well on the higher time frames. And say for example we're looking at this on the weekly, right? We're still able to trade this then on the daily, and we're still able to trade this on the 4 hour, and you're still going to find this same structure. You're going to find this same structure, exactly this exact same structure, moving down on the daily and on the hourly, and this is exactly what we get here. So we know that Great British Pound CAD is kind of moving up, and it has been for some time. We had a little bit of choppiness for quite some time, for like a period of about 6 months to a year, and price has kind of now managed to break to the next level. The reason why I want to look at Great British Pound CAD is on the 4 hour, you kind of get cycles on Great British Pound Canadian dollar, and they usually last about 2 weeks. So you usually get like, so 22nd of November, yeah. So this is nearly a month-long cycle of an uptrend. And let's just talk about about the uptrend at the moment. So we know here, okay, obviously, if we look at the market, we can see here that the market has shifted. It's stopped moving down, and we can see it's moving up. Okay, now it's quite an aggressive uptrend, this. When we're looking for reversal entries, not continuations, when we're looking at reversals, we want to take a few things into account. Okay, so when we're looking at a trend line, this isn't exactly the cleanest of trend lines here. I'll be honest, but it's a good example of you don't have to have it perfect to be able to see. Okay, so we can see here that the market structure shifted, okay, and we've kind of formed this trend line on the higher time frame. We know that we're moving up, all right, and then what we start to see is buyers get exhausted. Now we have made some new highs, but after we've made these new highs, that's why you can after we've made these new highs, we can start to see that we're not making any more new highs. Okay, so the buying has shifted from being really, really aggressive to it's slowing down. We make a new high, we get an aggressive sell-off straight away, and then we start to see, okay, it's respecting this level. You can look at the level in terms of two ways. You can look at it in terms of horizontal, and you can also look at it angled. Personally, I think angled is the better way to look at it. Although we kind of trade the horizontal level for the retest, but first, to be able to identify when the buying is slowing down, you need to be able to see the angle of the buying slowing down. Okay, so we can see this is a very sharp angle up, and then we can see, okay, well, where are our next touch points? Okay, well, this is this support that's mainly that's holding it, and then we switch to the horizontal support. So then the buying from that point has basically completely exhausted, and then we move to the downside, and we get then a retest, a perfect retest, and what we see is a head and shoulders formed. So that's kind of how you can start to see the market structure shifting, because trading reversals is quite difficult. People say always trade with the trend. The way I like to look at it is, when the trend changes, get in early, because that's when you're going to see the most volume. So you can see when the selling's happened quick. We've had a really big corrective move to the upside, and then all of a sudden we've just moved down, and we've moved down in a lot quicker than we've moved up, and then we've had a lovely consolidation period before we've moved up again. So when we look at this, we're looking at a clean entry here. Okay, so we've got like 1, 2, 3, 4 touch points, potentially 5 as well, before the buying started to kind of slow down. And then we can start to see, okay, well, we've got touch points here, and you've even got an entry here. You've actually got an early entry, although that's a very hard entry to get. Let's just be clear, because to actually confirm the market has fully switch momentum, you have to wait for the break above that level. So we can see aggressive, exhausted, starting to reverse, and then we get a complete reversal, and then we come up and we get a retest, which is where we can place limit orders. So when we look at the entry on this kind of key level, what we're looking at is, we're not looking at like having too much kind of liquidity sitting above it. You can see that this is like a really nice, it's a really nice level, and when prices kind of come up and retested it the first time, we've not got any big wicks up here. So that's one way to be able to spot a good entry. And the reason I'm showing you this on Great British Pound CAD is, and we'll do it on some longs as well, but the reason that I'm showing you on Great British Pound Canadian Dollar is because we've also had it again recently, and this is another trade that I was looking at. So we can see here that obviously we had this downtrend, really nice downtrend, by the way. Quite a few lovely touch points there. Prices tried to break above it at one point, it's not been able to, and you're also able, you're able to get, if we kind of zoom in, once structure is broken and we can see the switch in momentum, we kind of start looking for the key levels. Okay, so this is on the way up, so that's a really nice touch point, and we can see here that this is a level that is being respected. Maybe probably bring that down a little bit, because we've got these touches here on the 4 hour. If we go down to the 1 hour, you'll be able to see it a little bit more clearly. Okay, see, we've got the trend break. All right, you can see that selling has become exhausted, and we're now starting to get a switch in the momentum. Okay, we can also look at another level, which is here, just to give another bit of confirmation. We can see that we've got this kind of level that's played out here, and you can get an entry here or here as well before kind of, you know, price starts going up. But you can see it's very, very slow. This is on the hourly, so this move took 12 days to even just wipe out the area of liquidity at the top. So yeah, that's, you know, that's how you can see it on the way up. But we'll move to an example of a poor entry in terms of the market structure. Now we can see here, okay, we have this trend, price is actually broken away from there, and so what I'm just showing you here is you need to be able to identify how price is moving up, how aggressive, you know, and where the momentum switches are, and then when you can start to see buyers becoming a little bit exhausted. So if we look at the angle of the market here, you can see it moving up, we can see it moving up there, and then we've kind of redefined the trend. Okay, so we've got one touch point, we've got two touch points, three touch points, kind of, although that's mainly just off market structure. So making a high, breaking above that high, retesting, which is, you know, what, a strategy that a lot of people use, and for me, I personally don't use it. I don't like to trade market structure. I like to just trade reversals and trendline breakouts and continuations, which I guess is market structure, but I trade it in a different way. But anyway, so we can see here that we had obviously this buy, and we've kind of reached like a real big high, and you know, like, price has only got one way to go. It's got to come down, you know, and then we'll test these highs and we'll see what happens. Price will see what happens afterwards, and that's when we're kind of referring back to market structure. But yeah, anyway, getting back to it. Okay, so when we go on to this and we can kind of see the reversal, what we're looking at is we are looking at the market structure, or the previous levels of market structure, to be able to get an entry on the reversal, because we know that this is switched, right? We know that market structure has shifted. Okay, so we can see it here. We know the market structure has shifted. We know that this is a previous level of market structure. Buyers are exhausted, and we're now no longer making like a high. So we've got the high, and now we've got like a low, a lower high, lower low, lower high, and we can see here that price has tapped into that market structure. We can see here the price is consolidated in a very, very weak uptrend. This is a consolidation, this is not an uptrend, let's just be clear on that. It's a consolidation after a big move down, and then prices continued to move down. Now, the reason why I say that this is a bad entry, or this is why I would shy away from this entry and I wouldn't trade the market structure here, because one, this is very, very aggressive. We've seen some consolidation here above, or where the market structure is, and we are waiting on the market structure to shift into and be confirmed to go down. But the reason why I would never place a limit order here, and the reason why I didn't take this trade, is due to this liquidity lying here, and I do mention this in my previous video. If we see high levels of liquidity in this area where this market structure is, you can be pretty certain that this area is not going to be respected, and there is going to be some resting liquidity above it, of which is going to get swept before it moves to the downside. So you've got to take a few different approaches to trading the price action. You've got to understand the price action here, and also you've got to understand liquidity a little bit as well. Usually what I would do is, when I saw this break to the downside, you can kind of see that there's a clear head and shoulders here. You can see that there's a clear reversal, and I would look to get into the trade there. But what the best thing to look for at that point is to look at how the consolidation is working before you get in the entry, and you just kind of trade the same thing again, but you trade it on a smaller time frame. So for example, when we see that price is respecting this level, and we know that there's that resting liquidity above it, we wait for that liquidity to be taken out, and then we look to be able to get into the trade. And you know, you can look to get into it here, for example, quite aggressively, or if you just want to be 100% sure, you wait for the confirmation, you wait for it to break below it to make a new kind of low after this consolidation, then you wait for the retest, and then you get into short. Now you can look to go further, of course, but if you're able to, and this is why I say about tightening your R, if you're able to tighten your R enough, you just look for the nearest area of liquidity to be swept, and then the market can decide what it wants to do after that. You've already made your decision. You've already decided to leave the market at the nearest area of liquidity. Only if your R's tight enough though. So this is what I would say is a bad entry, which kind of leads me on to market conditions. Now, if we were to go back earlier, okay, and we were to go back here, where was that lovely head and shoulders? On this lovely head and shoulders, it's kind of clear cut, and that level is clear cut, and we can see the price is kind of coming up. We've got a bit of choppiness around here, but it's not too bad. Price is being like really respectful, and we're not seeing on any of the structure here like very aggressive liquidity. So you kind of know that it's going to be a better trade. Whereas when you've got this aggressive liquidity line there, then that is a bad trade, because you have to then, the thing you got to think about, right, is if price does come up and test there, you have to put your stop above that liquidity. And okay, so say we're going to wipe out that there, you will still get a 3R, don't get me wrong, but that's not the name of the game, or that's not the way that I trade anyway. The thing that I look for most is obviously a nice tight stop. So one of the, obviously we've touched on market conditions. One of the other things to take into account, and I would advise it, is just learning some basic fundamentals. So one of the reasons for the Canadian dollar weakening so much at the moment is, one, due to their low interest rates. They're going lower, lower faster than anybody else, and two is due to the tariffs that Trump's put on them. So that's really hurting their economy. So that, like, beforehand we were kind of sitting in this range, and price was struggling to break out, and we were sitting in this range for ages. So it's really lovely to be able to trade. You kind of know, like, okay, we're sitting in this range, so every time we get a market structure shift, like head and shoulders at the top, for example, we can just look to kind of come down and trade roughly the bottom of the range, and vice versa. When it's trending upwards, obviously your take profit target, like here, when it's trading upwards, if you're trading a reversal, your take profit is going to be lower. If you're trading on the way up, your take profit is going to be higher, because we can see that, price is like trending upwards. It's not really making like new lows, so we don't want to put our take profit at the previous low because it's going up, But yeah, so as I say, one of the things to take into account is that we usually get really nice price action, and okay, don't get me wrong, there's like a few days of choppiness, but it's creating lovely structure. But if we look at how aggressive this move is up, we've seen like a really big consolidation period here, which really doesn't have much structure to it. The only structure that it has is that it's working off this kind of level here, and you've even got a little bit of a head and shoulders You've even got a little bit of a head and shoulders here if you look. Okay, so you can kind of see the head and shoulders there, and then that's kind of come down and just wiped out that area of liquidity, but it's not really following any of the market structure rules. Everything's all very consolidation, it's consolidating a lot, and everything's really angled. If we go on to, I'll give you just one more example before I kind of leave you with this. One of the other things to also take into account as well, is when we're looking for a good entry, is if you're seeing the same setup across a couple of pairs. So if you're starting to see the same setup on Great British Pound CAD and Euro CAD, and you're starting to see a weakening trend and a market structure shift on both pairs, if that's giving you, that's a really good layer of added confluence, because if you're seeing it on both pairs, it means it's positioning for a big move. So that's one of the things that you really need to take into account as well. You'll see that on Great British Pound AUD, we'll have a look at it on one because it's a clean sheet. You'll see the price action is really nice, and it's really quite easy to read. So, like, for example, just showing you on a kind of back test, very aggressive uptrend, and you can, I literally go onto the chart and see this within minutes. Then we can see, okay, cool, prices changing, so we're going to see a pullback 100%. Are we going to look to target that area of liquidity? Probably not, because we're still trending upwards, so buyers are going to try step in at some point, and then we get obviously the break of this downtrend. We look for the market structure shift, and then you kind of go up, and then we go up here, and we can see that this is like a really nice uptrend, and we're just waiting for the position to be able to get into something lower down. Now obviously here, you'll be, I put this on my other charts, or what chart was it, sorry, on my IC market charts, which I actually prefer as charting software, but we see the break below it, and then we see a lovely perfectly clean retest of this. Now there was no news around this time, so it was a lot easier trade. We had a lot of news around this. So last night we had some high impact Australian news, and this morning we had some high impact Great British Pound news, which was the inflation rate, which is what everyone was waiting on. So there's a lot of liquidity grabbing around this. So I actually managed to take the move up until this level here, but I got up until that level, but I got stopped out twice on these liquidity grabs. So there's never going to be the perfect entry, but what you do need to be able to identify and rely on is that the system works. So because I know the system works, I'm happy to trade the system, and I will always trade the system, and be able to take profit from it. Obviously you can see the market structure shift there, but then you can also see the liquidity grab, which is just something you can't account for, so yeah, that's just how to spot a good entry from a bad entry. If there's any other questions that you've got, feel free to just put them, to put it in the chat and I'll get back to you, or to put it in the comments and I'll get back to you. And good luck, guys.